Yep. Hello and welcome. You're with us here on Business Today, and markets this afternoon are looking good. 60,772. We've got Nifty as well, 18,017. So well above those levels that the market has been watching out for. Let's in fact go across to Dhananjay, who's with us on some of the action this afternoon. And it looks like it's IT that's back in the fray. We've got select majors and auto, pharma that are also looking good today. Dhananjay, the Nifty now above these levels. Do you feel we're going to manage to sustain the gains that we're looking at today?
So I think there has been a sort of optimism as far as the market sentiment is concerned. I think it is largely coming from the fact that in the result season, the sectors, especially I would say the banking sector, NBFCs, auto, and IT sector have actually performed well, and been some positive surprises there, especially for the NBFCs and banking sector, which is a significant portion of our index. And IT has not done too bad actually. There was expectation after the sort of a downgrade that happened last quarter. There was expectation that it would continue to be so. But I think the IT sector has shown a certain amount of resilience as far as the outlook is concerned, and also on the margins, the pressure hasn't been that great. So I think these are the two major factors why there has been a buoyancy, and auto sector has seen some kind of an upgrade. So I think broadly those are the factors. And I think from a global standpoint, also there has been a weakening in dollar recently after the major run that had happened. So all those things are contributing to the sentiment as far as the market is concerned as of now. I would say that one has to really look at the earnings trajectory at a broader level, how it progresses going forward. There, what we are basically seeing is that at a much larger level, if I look at, roughly about, we are analyzing about 420, 440 kind of number of companies, and where we are seeing that there is some kind of flattishness that we are seeing as far as the operating performance is concerned, and there is a rising interest cost and rising tax, etc. That is translating into moderation in the overall profit scenario as a whole. So I think the market is basically truncated. There is a sentiment that is somewhat positive, and there are select sectors which were seen to be stressed. There is some positive outcome from the results. I think broadly that's how I would describe the market sentiment as of now.
So is there anything that stands out today or in the last week or so, Dhananjay? Because otherwise I see some similar themes playing out, of course. But anything that you've, particularly been, I mean, JSW Group companies are on a roll. We've got IT back in action today. Ultratech is back in action as well. So, what's on your radar?
So the thing is that the way the market is, the earnings trajectory will be very according to me. As of now, what we are seeing is that there is a buoyancy as far as the banking sector is concerned, largely coming from the fact that the credit growth has actually become stronger. You're at something like 16% plus as far as overall credit growth is concerned. And there is a rise in interest rates, and that's actually sort of translating into better performance as far as profits of banks are concerned. So that's number one thing that has been important. I think auto sector has actually been somewhat positive, but what I am sort of concerned about is the material sector, especially the metal sector, where there has been a significant downscaling as far as operating profit and net profit is concerned. There is also with respect to cement, consumer durables, etc., have also sort of kind of a disappointed as far as the performance is concerned. And we are sort of cognizant of the fact that there is a rising rate scenario, interest rate scenario that might sort of eat up into the operating profits of companies at large. So I think one has to really look at whether what banks are actually gaining by way of taking higher risks and while pushing for higher credit. to get higher yields on advances, is that going to be a sustainable scenario in the next 2 or 3 quarters, when a slowdown happens, and there could be a rise in the NPA ratios going forward. So the credit cost benefits that we are seeing up till now may start peaking out, and that might start weighing on the performance of banking sector in the next 2 or 3 quarters. So those are the factors, I would say, which are very clearly there in my mind at this juncture.
Okay. We've got some of those auto majors have done particularly well today. Mahindra, Maruti. We've got FS e-commerce that's actually spiked back. It's up at upper circuit today. So not quite sure what's going on there, but it's looking really good. HDFC is up 2 to 3%. L&T had a really good day, 2 to 3% on that one as well. Gland Pharma on the downside was one that really looked a little weak in trade, down about 4-5%. Cement is having a good session. Ambuja, Ultratech, all seeing about 2-3% gains coming in there. In the pharma pack, it's Sun that stood out. That's one that clearly was in favor in today's session. And IT across the board, we did see quite a few stocks there looking good. JSW Energy, I mentioned earlier, again, Ashok Leyland from the auto pack. Aisha also from the auto pack was looking pretty decent in today's trade. Karur Vaisya from the banking names, that's one that stood out. UPL was steady today. United Spirits was steady as well. And a whole host of other names as well that we can continue to talk about. Indian Hotels looking good, up about 3.5% in today's session. Jubilant Food, so consumption perhaps as a theme also playing out. What do you think about the consumption theme, Dhananjay, especially at a time like this?
So we have been more positive on the consumption theme for the last 6-8 months since the beginning of this year. I think significantly we were overweight on autos because we knew that as commodity prices, especially steel and metal, correct, there will be benefit from the auto sector. So I think that has done fairly well. I think the optimism in the auto sector is definitely aligning with that theme. But I think what has to be really considered here is the concern that could arise because of shortage in semiconductor supply as well, especially with the ban that US has actually imposed on China. So there can be a certain disruption as far as the semiconductor supply is concerned. Secondly, I would say that as far as the lending side is concerned, so banks are actually pushing a lot of retail lending, durables, auto lending, etc. Both by banks and NBFC, we are seeing that. I think that could be that could be the reason why there is a positivity as far as the consumption theme is concerned with respect to durables, etc. We'll have to see whether the cost side still is beneficial for the sector or not, especially the durable side. As of now, there has been certain disappointment as far as major results are concerned on the durable side. So we'll have to really look at that. I think the FMCG pack, especially things like ITC, Nestle, etc., have actually posted a positive result, and there is a certain amount of urban push that does look to be reflecting in this whole area, and also in the retail space, organized retail space. So I think these are the areas that have been overweight in our overall portfolio, construct. So I think consumption looks to be good as of now. Especially, I would say that urban consumption can hold on better versus the rural piece, where we are seeing a certain kind of headwind, especially the rural areas where government spending is actually sort of narrowing in the recent times. So I think we'll have to be very selective in the consumer staples and consumer goods segment.
Okay, a really good day for trade. Exciting session and a good amount of earnings as well coming in. Mixed bag, of course, but keeping the markets on its toes. Let's in fact go across to Tanya. She's taking a look at some of the other previews that we're watching out for. Tanya?
Well, absolutely, Aabha. Let's with Bharti Airtel first. Well, the company is expected to report a doubling of year-on-year profits. The brokerage firms expect Bharti Airtel to report over 100% YY rise in its net profit on a 20% rise in sales. Prabhudas Liladhar has factored in a net subscriber addition of 20 lakh and average revenue per user of 188 rupees. The stock was in fact trading higher ahead of its earnings, up around 2% in today's trading session. Coming to Tata Steel, well, experts believe that it would be a weak quarter for the company, both in Europe and India, amid a fall in steel prices, lower volume, and higher energy costs in Europe. Brokerage firms expect Tata Steel to clock around an 80% YY drop in its net profit on a 3 to 4% YY rise in sales. Besides the number, we'll be tracking the management guidance on the Europe operations and the impact of depreciating British pound against the US dollar. Shares of Tata Steel were in fact among the top Sensex losers in an otherwise strong market today. For L&T, the brokerages expect consolidated revenue growth of around 17% YOY, led by growth in IT, infrastructure, heavy engineering, and hydrocarbon. According to the experts, a strong tender pipeline from the domestic as well as the export market is likely to drive order inflows. During the quarter, company announced orders in the range of 6,500 to 13,500 crore rupees. L&T shares also ended in the green ahead of its numbers. Back to you.
All right, Tanya, thanks for that. Dhananjay, closing comments then. Watching out for continued heavy earnings tomorrow. Any expectations from some of these giants or any cues that you're watching out for now going ahead?
So I think what I am very critically looking at is what happens to the IT pack. It has actually been an underperformer over the last, I would say, this year. I would say it has been a major underperformer. I think what's the guidance from the company, especially the large cap and mid cap companies, in terms of the revenue trajectory in the context that you have a sort of a stress coming up in the US and the European continents. So I think how does IT companies grapple with that will be a very crucial thing to really look at. There has been correction in valuations and all. We want to know whether have reached a certain valuation from where one can look at good trajectory for returns. I think that is an important thing which we are looking at this juncture. Yeah.
Thanks so much for joining us. Let's also now get you a comment from the big IPO for this week. Bikashi Foods International, that's the third largest ethnic snacks company in India, has fixed the price band for its upcoming IPO at 285 to 300 a piece. Now, the upper band, this is at about 880 crores. Sakshi spoke with the management. Listen in.
With the IPO after 5 years or maybe after 10 years, but why not today? So I realized that today I am on my peak energy and I can visualize. I have a proper vision for my company for next 5 to 10 years, how I can progress, what I can do. So I thought, let's do the IPO right now. And with the IPO, we will be on our toes with all the compliances and objectives and everything. So it will also help us to compete in the better competition in the market. This IPO is for the ethnic snacks and for the ethnic brand. And no one halwai is called in Indian market halwai. No one has a IPO listed. Right. So this would be the first company in PSC or in IPO who will be listed as in halwai company or as in Bhujia ka share or this Bikaner movement is a very proud moment for everyone. And right now we have a 78% and that is the pre-IPO. But after the post-IPO, the total would be 76.5%. So still 1.5% would be left to release in next 1 or 2 years maybe.
All right, that's where we leave it on the show today. A fantastic day of trade. Let's see if we keep up this momentum during the week. Thanks so much for watching.